Hey everybody, Smart Silver Stacker here. Hope you're all doing well today. I want to take a moment in this video and today to just sit back and reflect as we approach the end here of 2022, just how much has really changed over the past year because, we're not at the end of 2022 yet, but Thanksgiving is only a week away, so we are getting close. And if you go back 1 year in time, just go back in your mind, use your imagination, and remember what things were like back in November of 2021, same time last year. So much was very different from what it is today. Silver was a little pricier, but not much different. The price of silver was around 25 bucks, so that honestly hasn't changed too much. Today, I think we're down around 21. So not a huge difference there. In percentage terms, I guess it's a bit of a difference, but over the course of a year, a $4 difference in silver doesn't really seem that significant when you consider some of the other changes. How about, first of all, there was no war in Ukraine? That's a pretty big one right there. Think about crypto. What was Bitcoin doing? Back in November of 2021, Bitcoin was, what, over $60,000 a coin? And that whole crypto mania was in full swing. There were ads for crypto everywhere you looked. There were stadiums getting named after cryptos. Absolutely mind-blowing how much things can change in a year. And, look at where we are now. FTX has collapsed. I saw today that Binance was halting some of its tokens. Who knows what that's going to mean. Seems like the dominoes from the FTX collapse might take a while yet to completely fall. And, it's just a completely different situation in that space from a year ago. And metals, gold and silver, they have done, I think, a remarkably good job of what they're supposed to do, maintaining value. Now, inflation, think about inflation. Inflation back in November of 2021, I think that was around the time that they were getting away from calling inflation transitory. But for the vast majority of that year, that was the tune we were hearing from, the so-called financial experts, the people that we put in charge of our financial system. Inflation was transitory. And of course, that turned out to be completely wrong. You really couldn't get that much more wrong than they did. But I would have thought that given how persistent inflation has been, that the price of silver and also of gold would have been higher. But as we all know, a lot has happened over the past year involving the Fed and interest rates and the relative strength of the US dollar. And that has contributed to some of the price action that we might not have expected in precious metals. Considering how persistent and pervasive the inflation problem has been and how it has become, I personally, it's true, I would have expected the price of both gold and silver to be higher than they are today. And yet, both metals have done remarkably well compared to other assets. Look at stocks. Back in November of 2021, the NASDAQ was at an all-time high. The bubble in stocks was nearing its peak. And of course, the Fed hadn't embarked on its rate hiking adventure yet. They hadn't tried to bring the inflation monster under control in any significant way. And so, stocks and other assets were all near their peak of being inflated. At the time, I don't think anybody was aware of that. Some folks, sure, but the majority, obviously just by the fact that the assets remained intact or the bubbles remained intact at that point, shows that people weren't really expecting what was to come. But now, a year later, obviously hindsight is 2020. The dollar, probably one of the best performing assets of 2022. Who would have seen that coming, right? Although I do think that is probably going to be a short-lived phenomenon. I don't think that's going to be the case a year from today. I think if we look back in a year, and the fun thing about YouTube is we'll actually be able to do that because this video will still be up. We'll be able to go back and take a look and say, wow, how much different things were back in November of 2022 from now, looking back from the future. And what's that going to look like, do you think? The end of the year, as we wrap things up, I think it's a good time to reflect both on what has just occurred over the past year and also how things are going to change moving forward. Now, I do really believe that this year coming up, 2023, is going to be different for gold and silver, also for other assets like platinum, also copper. Copper is going to be a big one in 2023, I believe. And in general, physical, tangible assets, commodities, I think are going to do very, very well in 2023. And there's a number of reasons for that. One is that inflation certainly is not a transitory phenomenon. We are well aware of that now. And what was it that Jerome Powell said? He said, now we know how little we know about inflation. Well, I think that inflation is not such a mystery as some central bankers like to make it out to be. And despite the fact that the Fed seems committed to this fight against inflation via rate hikes, not via reining in U.S. government fiscal policy, not by, stopping the expansion of the massive gargantuan debt bubble, but simply by raising rates. And you know what that means, of course. It means demand destruction. That's the technique for fighting inflation here. Make everybody poorer so they can't bid up assets the way that they have been. That's going to be the game plan moving forward. I mean, the Fed has basically told us as much. And so, one of the things I think we can expect moving forward is that there is going to be some financial pain. There is going to be some tightness in financial markets. But I don't think it's going to be as rough a year for gold and silver as this year has been. And Michael Burry, he's the famous investor from The Big Short. He was one of the guys who made tremendous sums of money from forecasting accurately the 2008 financial crisis and placing the appropriate bets. He tweeted just a couple days ago, the tweet has since been deleted, but he tweeted, "I've long thought that the time for gold would be when crypto scandals merge into contagion." And, what's Michael Burry telling us? Well, he's telling us that he thinks that now is the time for gold. And I would tend to agree with him. And one of the things we can take a look at is the gold to silver ratio and how that's performed over the past months and years. And, right now, gold to silver ratio is around 84. It's down from a high in September, went as high as 95, which is, incredibly high. It's near the all-time highs. I think the absolute all-time high around 120, but that was kind of a very unusual phenomenon back in 2020. What happened back in that year. But still, today, even at 84, the gold to silver ratio very high. One thing we've seen since September is that both metals are rallying. Silver a little bit faster than gold. And so we've seen that gold to silver ratio come down. And I think we're going to see continued rallies in the precious metals in 2023. One of the reasons for that is that central banks around the world have been accumulating this stuff at a record pace. And I don't think they're going to stop anytime soon. And we can talk about why central banks are accumulating so much gold, why they think it's a good idea to get into physical, tangible assets, and why they think that's an important way to protect themselves. And I think that we should all be taking a cue from central banks as we head into 2023 and copying a playbook from them, and that is accumulating physical gold and also physical silver. Central banks don't have any reserves of silver, at least not that they're open about. But gold and silver, they have a historical relationship that you can't deny. If you expect gold to go up, silver is very likely going to follow in a very big way. And throughout history, one of the things that happens in these bull markets in precious metals is silver tends to move up a bit faster than gold. That's why you see the gold to silver ratio tend to collapse and move lower in these major bull markets. And today it's still at 84, very high. And that is indicative that there's still a lot of room for gold and silver to move up. And, one of the reasons I believe that banks are accumulating so much gold at the moment is that they're afraid. Gold is a safe haven. Gold is where you go when you don't want to buy risky assets. And, the Financial Times, they put out an article a couple days ago. It's called The Cracks in the U.S. Treasury Bond Market. And included in that article was this chart, which shows how, as the size of the U.S. bond market, aka the size of the U.S. outstanding debt, has grown tremendously, the liquidity in that market has actually declined. And that is not a good sign. When you have liquidity declining in the world's biggest debt market, that is a sign that volatility is on its way. And we've certainly already witnessed that in recent days and recent weeks and recent months with some of the activity in U.S. bond yields. I mean, just look at the bond yield on the U.S. 10-year Treasury. It has been oscillating up and down in a way that you should not see treasuries in the world's biggest bond market do. I mean, you just shouldn't see the price so volatile, and yet it is. And there was a quote in that article from the Financial Times from Greg Peters. He's the co-chief investment officer at PGIM Fixed Income. And what he said was, markets are in a much more fragile place with terrible liquidity. And the way I think about fragile market function is that the odds of a financial accident are just higher. So we're in an environment where there's all this uncertainty, where banks are acquiring precious metals at a record pace, at a pace not seen since 1967, according to the report that we got from the World Gold Council a couple weeks ago. Got the COMEX and the LBMA, they're being drained of their physical metal supplies. And you've got folks like Greg Peters warning that the odds of a financial accident are higher. And we've already seen that. Look at what happened with the Bank of England and UK pension funds. Andrew Bailey, the head of the Bank of England, was real hawkish up until something broke. And as soon as it did, as soon as we saw the pension funds needing a bailout, they got it. The Bank of England moved in there and they intervened. And I think it's very, very likely that we're going to see an event like that probably within the next year. When we're looking back from November of 2023 on today, we'll say, wow, the financial markets hadn't broken yet. Things were still functioning. I mean, the writing was on the wall, just like the writing was on the wall back in November of 2021 of the crypto bubble. How crazy that was getting. Well, the writing on the wall today is in the U.S. debt market, and I think that that's something we should all absolutely be taking heed of, because a crisis in the US bond market, that's not going to be like a crisis in the UK bond market. It's a much bigger market over here, and there's a lot more at risk. And notably, one of the things at risk, is the US dollar status as the world reserve currency. Now, I don't think that a year from now, the dollar is going to have lost its world reserve currency status. I think that that is not going to happen for a while, although the likelihood of it happening now is much higher than it's ever been in the dollar's history as the world's reserve currency. The dollar's been the world reserve currency now since the end of World War II. First we had the Bretton Woods Agreement, where a dollar backed up by gold was held around the world. And then in 1971, Richard Nixon got his, temporary suspension of convertibility of the dollar into gold, and that's been the status quo for the past 51 years. And never before in the history of the dollar has there been such a risk to its status as the world reserve currency. And I think that's another reason that central banks around the world are stacking gold, because they know that the current financial status quo is in danger. And again, it takes a while, it takes a lot to dislodge a currency that has been the world's premier currency for 80 years, but it is possible, and it's happened time and time again throughout history. So that's something that we all need to be very, very concerned about at the moment. And, judging from the actions of central banks, they are, and we should all be taking heed. Now, for anybody who wants to accumulate some precious metals, right now you can get these 10-ounce generic bars at SD Bullion. They're having a sale. I think it's going on for another 24 hours, where you can get these for $2.99 over spot. And I just want to let you know, I have not seen a deal like that on precious metals personally in, it seems like, months. The high premium environment that we are in at the moment is very persistent, it seems, and the fact that they've got these on sale right now for $2.99 over spot any quantity is a great deal. So I do just want to mention that SD Bullion is a channel sponsor, and for all those stackers out there, I want to make sure that you're aware of that sale, because I think it's a really good opportunity without having to go out and buy, a 100-ounce bar or a kilo bar of silver to get your hands on some silver at a relatively low spot price. But what are some of the other things that are going to happen over the next year? Well, seems like the price of commodities in general is going to be on the rise. I mentioned copper a few minutes ago, and one of the reasons I think this stuff is going to be so much more valuable a year from now, a lot of it has to do with China. China reopening their economy. Right now, China is still shuttered a lot of its industry because of their COVID zero policies and some of the most restrictive lockdowns in the world regarding COVID. But it's starting to look like that's going to ease up here in the relatively near future. No exact timetable, but when it does, industrial activity is going to pick up a lot, and there's going to be a huge bid for raw materials, including copper, nickel, platinum, and palladium. Platinum's one that I think is absolutely ripe for possibly even a squeeze in the next year. We might see a squeeze in platinum and palladium, industrial metals that there's a very, very, very tight supply of. So these are something that should be on your radar moving forward as well. And, as far as China reopening, it's not just going to affect metals, it's also going to affect the price of energy. It's going to affect the cost of shipping. Lots of things are going to be affected by that. That's going to be a major trend as we head into the beginning of 2023. And, speaking of China and the dollar's world reserve currency status, I'm not going to get too much into the topic of the petrodollar in this video, because I just put out a big one a couple days ago called BRICS Expansion and the Petrodollar, about the expansion of the BRICS organization and what that means for the petrodollar. So if you haven't seen that yet, definitely go check that out. But before we wrap up this year, President Xi Jinping of China is supposed to go meet in Saudi Arabia with MBS. And, who knows what they're going to be talking about. There's going to be a lot on the agenda, I'm sure, but one of the topics will very likely be the pricing of Saudi petroleum, Saudi oil in currencies other than the dollar, specifically in the yuan, the foundation of basically a petro yuan. And that's a trend that's coming up. And by the time we get to November 2023, that may very well be a line that has been crossed. And while I do believe that the dollar is going to remain the world reserve currency for probably years to come, if that is something that we see, that means that the dollar's status as the world reserve currency, its days are numbered. And so, there's a lot going on right now in the world that we all need to be paying attention to as we wrap up this year and as we head into 2023. And as far as what we can all do to get prepared for that, I think that if you've been accumulating hard assets, if you've been getting out of debt, if you've been trying to learn some new skills, if you've been doing any of that, you're on the right track. And when you see the price action in gold and silver, for example, over the past year, it hasn't looked too good. Not a lot of gains in the face of significant inflation. But like I said, there's a lot of reasons for that, and I don't think that that's going to be the case moving forward into next year. Of course, I don't have a crystal ball. I'm not infallible. I'm just a guy on YouTube anyway. But I will say this, that if you're accumulating hard assets, I think you're on the right path. And, something that occurs is I think people get impatient with precious metals and with hard assets and with gold. And, they expect price movement to come very quickly. They think it's the sort of thing that's going to happen in months or weeks. And these things that we're talking about on this channel that we cover, the shifts in global monetary system, the potential for the breaking in the U.S. debt market. This is not the sort of thing that happens rapidly. This is the sort of thing that takes potentially years to play out. But that doesn't mean that getting into hard assets is a waste of time or that it's not the right strategy. I mean, just look at what central banks are doing. Are they worried about the price of gold moving up or down tomorrow or over the next year? No, they're playing the long game. In fact, one of the things that we've seen is that central banks, as the price of gold comes down, they tend to buy more. And that's just smart. If you have a conviction that ultimately there's a lot of risk in the world and in markets, and I mean, it's hard to imagine looking around in the scenario that we're living through today and not having that feeling. If that's your conviction, then you should view pullbacks in the price of hard assets like gold and silver as a big opportunity, because that's what they are. And, I get a lot of comments on the channel, people saying things like, well, the gold stackers and the silver stackers, they've been saying the same thing for decades. They've been saying buy silver since the year 2000 or since 1971. I mean, I'm sure there's some of you out there who can remember when the dollar got taken off of the gold standard, and people probably made a big fuss about it back then. And of course, if you did buy gold or silver at that time, and you were smart enough to, at least sell and take some of your profits during some of the peaks that we've seen since then, you've probably done pretty well for yourself. The point I'm trying to make here is that just because investors or, talking heads or stackers or whoever you want to say has been saying get your hands on hard assets for the past decade or for the past 20 years, doesn't mean they've been wrong. I personally have been stacking for over a decade, and am I upset that the dollar hasn't collapsed yet and that the price of precious metals hasn't gone sky high? No, I'm not. I mean, I'm happy for the opportunity to continue to be able to accumulate assets like gold and silver at the ridiculously low prices that we have today and at the incredible valuations that we have today. And I don't take it as a sign that, my investments or my savings, because I view precious metals more as really of a savings than as an investment, but I don't feel like that's been misplaced just because we haven't seen tremendous price action in gold and silver yet, because I still have the conviction that that day is coming. And I have the conviction that ultimately at some point, the dollar price of gold and silver is probably going to be completely irrelevant one day. In fact, saying that it's going to be irrelevant one day, it's guaranteed to be irrelevant one day, because the dollar is just a paper fiat currency. And, they last and they do real well until they don't. And every single paper currency that mankind has ever used throughout history has eventually fallen apart. It's eventually collapsed. And so I don't think you should ever take it as a mistake that you're getting out of paper and into physical metal. Now, is it rough to buy some physical metal and then see the paper price drop? Well, I guess, but only if you're really focusing on that sort of thing. I think the important thing to focus on is, like I said, learning some skills, becoming more resilient, getting out of debt, accumulating hard assets, and, the paper price of silver, just ignore it. Just don't even pay any attention to it. Look at it every now and then if you feel like you need to. And I mean, I look at the price of silver pretty frequently, but I can honestly say that it's never really bothered me when the price of silver drops, because if you understand the long game and you understand what's going on, then you also understand that, paper silver markets, they're rigged, they're manipulated. They're also enormous in comparison to the size of the physical market. For every ounce of physical metal that gets pulled out of the ground, there are hundreds of paper ounces getting traded over at the COMEX. And so you got to understand that paper price, it's not based in reality. It's a derivative of silver, and the derivative is what people are actually looking at as the real thing. And that's a situation that you can take advantage of by getting your hands on some cheap physical metal. So anyway, this video has gone on quite long enough. I think I'm nearing 25 minutes, so that's a long one for me. If you enjoyed it, please do give it a big thumbs up down below. If you've watched this long, I can only say a huge thank you for sticking around. And if you haven't subscribed to the channel yet, consider subscribing. I know there's a lot of folks who watch these videos that are not subscribed, so if you haven't clicked that subscribe button, please do that. And I hope that you all have a fantastic Thanksgiving next week. I will likely be putting out videos before then, But I do just want to say a big thank you to all of you watching. I, for one, am incredibly thankful and incredibly grateful for each and every one of you. And I just think you're a great audience, and I love hearing from you in the comments. So let me know what you think about this video down below. And with that being said, I will catch you next time. Thank you so much for watching. Smart Silver Stacker, out.